Hi guys, good afternoon and welcome to Money Control. I'm Karunya Rao and it's 1 p.m. on your clock. It's time to get you that update on commodities. Joining me in conversation today is Sugandha from Religare Broking, and she's here to give us an update on what's happening in the metals universe. Hi Sugandha, and thank you for joining in.
Yeah, hi Karunya, pleasure to be here.
So, if we look at some of these key metal prices, whether it's aluminum, copper, or even some other names like zinc as well, which are typically slow movers. Talk to us about why there has been a significant cool off in their prices. What are the factors at play?
Yeah, so Karunya, looking at the commodity prices, especially the base metal complex, we have seen a sharp cut this week of close to 5 to 9% is the slide that we have witnessed in all of these base metal prices. There are major factors which are playing out at the moment. The first major factor is the tightening monetary conditions globally. The US Fed chair has already sounded very hawkish at the last week Jackson Hole symposium, wherein he has given clear indications that Fed is likely to be very aggressive and they're likely to keep their fight on in terms of controlling inflation. So that means the path of interest rate hike in US is going to be, aggressive and forceful. And markets are now pricing in a 75 basis point rate hike at the September meeting of Fed. Apart from that, we have also seen that ECB officials have also sounded very hawkish recently as inflation in the Eurozone has also been inching higher. So now market is expecting that ECB is also likely to hike interest rates by 75 basis point at their September 8th meeting. So most of the key central banks are sounding very hawkish, and that's a precise reason we have seen that there has been a lot of selling pressure that we have witnessed in base metal prices. Apart from that, dollar index has inched to fresh 20-year highs close to levels of around 110 mark. That's also suppressing base metal prices. Alongside this, we have a lot of concerns about the real estate sector in China. And China has already imposed some more curbs, COVID-19 curbs in one of its key cities. So that is also leading to a lot of concerns about the demand outlook for all of these base metals. And if we also look at the key economic data from China, the factory activity data has shown contraction for the second month in a row. So all of these factors in tandem are actually leading to a lot of pressure in all of these base metal prices.
All right. Okay. So, but what is the bigger trend that we're looking at here? Because we know for a fact that it will take some more quarters for inflation to be tamed, for recessionary fears to go away. Um, Probably, policymakers and even central banks will remain aggressive and hawkish, perhaps in some cases. So, in light of all of that, where are these prices headed? Because at these levels, would you recommend somebody to start investing or entering, or do you think there could be some more pain?
I think, Karuna, there can be some more pain because as of now, I think there are a lot of concerns about global economic slowdown, and that's precisely the fallout from the aggressive monetary tightening policies of the key central banks. So, in fact, Fed chair has already hinted that US can be in for a period of painful growth as well. So, he's sounding hawkish and is also hinting at global economic slowdown and, in fact, a slowdown in the US economy. So, I think there can be some more pain, though for a very short term perspective, yes, there can be some pullback after the recent downside that we have seen in prices. So, if I look at the zinc prices, we have seen a cut of almost 8.5% this week itself. So, there will be a small relief rally in prices, but the overall trend is still favored towards downside, is skewed towards downside. So if I look at the LME prices, we are finding some support at levels of around 3180 per ton mark at LME. And if I talk about the domestic markets, I think we have some support in place at 290 odd levels. So there will be some relief rally, but then overall it's a sell on rise market. And we are likely to see downward levels of around, let's say, 270 for zinc. And if I talk about the LME prices, I think we are headed lower towards level of around 2900 per ton for zinc prices. Similar is the case for copper prices. Prices edged higher, but then they have witnessed a lot of selling pressure at levels of close to 676 mark, from wherein they have slipped this week towards level of close to 630 mark. So there is some support which is emerging at lower levels of 627, but then there would only be a bounce back in prices. The overall trend is skewed on the downside. So if I look at the overall trend, I think prices are headed lower towards level of around 7200 at LME. And in tandem with both of these metals, I think aluminum prices are also headed lower. And 2300 per ton is the immediate support from where we can see some bounce back, a relief rally towards 2380 or levels. But eventually, prices will head lower. And once the support of 2300 mark is breached, we can look forward to levels of around 2100 as well in coming days.
Okay, so does that mean some more, good news coming in for end users, for manufacturing companies, cap good companies, or even auto giants who have been reeling under pressure? Or do you think that supply is still going to hurt them? Inventory situation is still bleak.
I think it's going to be a good news globally because the cool off in commodity prices is likely to lead to a cool off in inflation also. Inflation is already showing some early signs of easing in the developed world, and I think if we see a further cool off in commodity prices and if we see the supply chains bottlenecks being removed, I think that's going to be a positive news. We have already seen a lot of supply chain bottlenecks which actually led to prices soaring higher, especially the base metal complex. But then I think now it's time that prices are likely to cool off further.
If at this point somebody were to ask you about whether they should or should not trade with metals, what would be your advice?
I think one can certainly look at trading aspect, but yes, strict stop losses should be in place. As I've maintained, there can be a bounce back in prices, but eventually it's going to be a sell on rise market. And I think one should also keep an eye on the dollar index movement that will provide further cues about the trend going forward. In case there is a significant cool off in dollar index, that will certainly favor base metal prices. But as dollar index has already given a breakout above 109.50 mark, which was a crucial hurdle, I think the pressure is likely to continue for a while now. And I think the dollar index can head higher towards level of around 110.80 to 111 mark as well from a medium term perspective.
So,
We also have the
yeah.
non-farm payrolls data, which is lined up in the evening. I think in case the labor market shows strength in the US, that will give US Fed further space to hike interest rates going forward.
All right. Okay. So, what about other metals which haven't corrected much? A nickel, for example. How is that positioned right now? Good time to look at some of these outperformers or relatively less weak performing metals?
So I think, Karunya, we are not seeing significant volatility or liquidity in nickel prices at the moment. So I'm not tracking nickel at the moment. So I would not be able to comment on nickel prices at the moment.
Or
But yes,
any other metal,
yeah,
if not
yeah,
nickel.
I have been tracking lead prices. I think lead prices are also trading very sideways, but yes, they also look to remain under pressure in coming days. I think prices can head lower towards level of around 169 to 168 from a medium term perspective. Yes, there would be some trading opportunities emerging. There can be some bounce back towards level of around 181 to 182 levels at the domestic markets, but then that should be construed as a selling opportunity to go for short positions. And eventually, we can look forward to levels of around 168 to 169.
Sugandha, the festive season is officially on, and typically we look at soaring prices of precious metals around this time, whether it's festivals or wedding season. This time around, however, gold did touch that multi week low. So, is it a good time to buy, whether it's physical gold or digital gold?
Yes, Karunya, perfect. I mean, it's a perfect time to buy gold because prices are trading at a significant discount to all-time highs. I think it's a perfect opportunity since the wedding season is approaching, the festival season is approaching, and prices are already trading at a 6-week low. So yes, I think there is a very good opportunity to buy for consumption purposes as well as for investment purposes and trading perspective also. So if I look at the larger picture, prices have a very strong support, a long-standing support at levels of close to $16.80 per ounce in international markets. Prices have already been suppressed because of the tightening monetary conditions and the hawkish stance of various central banks and the surge that we have seen in dollar index. But now I think it's a very sacrosanct level. In case that holds, I think there would be good buying opportunities. It's a bargain buy at lower levels. So for consumption purposes, obviously we can look for jewelry, but then if somebody is looking to invest in gold, I would suggest to go for gold bonds or gold ETFs because from a longer term perspective, they provide better returns, better risk adjusted returns, and they also diversify your portfolio. With the kind of volatility that we are seeing in equities also, and the risk sentiments are I think, sad at the moment. I think gold is a perfect add-on to your portfolio for investment purposes also.
Okay, guys, so if you haven't looked at gold actively, now is the time to go grab that opportunity because of the way the gold prices have come off from those highs. And Sugandha, on that happy note, we'd like to thank you for joining in and sharing your insights and observations of the metals market and the precious metals as well. And guys, thank you for tuning in. We'll be back 1 o'clock again on Monday with a fresh new commodities update.